All right, let's get this party started. We can get that little intro. That intro where I pop into the screen and look like a little angry retard. I want you to pay attention to that. Look at this. Okay, that's not the one. Let's move this forward. There we go. It's here. There goes like I just had a stop loss being hit. Like I need to change that. Holy shit. Morning everyone. Let's get the likes up. Get the likes up. What do we have here? Got the S&P 500. Very, very nice. I'm gonna break down this system, and I'm not sure if you know, but we have the RL said, no, not the RL said. The technical trading workshop is coming up, and I'm sure you've might have seen the landing page that I got for the event. You go to rlsaidtrading.com and you sign up with your email, and you follow the YouTube and the Telegram and the Twitter. Maybe you've already on Twitter, and obviously you're here on YouTube, so you're probably subscribed to the channel. If you're not subscribed to the channel, you know what to do. Hit that subscribe, blah 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 blah, all of that. Telegram though, you want to be subscribed to Telegram. That's a good one. That's a good one. Okay, the S&P 500. What's happening with the S&P 500 and what's happening with my other positions? Well, what's happening with my other positions is that I'm absolutely screwed on those, but the S&P 500 is looking very good. And I'm trading this on my personal account, and I'm just piling in positions on this one. So I'm gonna go in and I'm gonna change in quite some good profits on this one. You know, I started building my first position here, then we had a break and retest of this 4-hour W, and I added a double D position, and then we had a confirmation of a move higher, and I doubled the position again, and now what I'm looking at is a new stop loss right here. And of course, if you do have any questions on anything that I do cover today, let me know in the comments and I will gladly help you out. So this is a new stop loss that I have on this position. It's 58.54. Looking at the daily, it looks pretty good. We could very easily pull back though, but I'm hoping that today we're gonna be seeing follow through to the upside. And now obviously I have a much bigger position now than what I had originally. So I need to give me a second. Okay. So let's see, I don't have, probably have to open the trading panel, trading my personal account on EURAD. Do I recommend EURAD? I don't know. Honestly, I don't know. Not the it does work. The email does work. Okay, this comment right here, I'm gonna have another landing page up today, but just to comment on this right here, it does work. Your sign up, if you put in your email and then you click join, your email is added on the back end, but for some reason there's no, the message that should pop up saying like thank you for registering or something like that, it's gone. I don't know what happened with that one, but we're working on that and we're going to be setting up, we're going to be fixing that today. But if you go to the website rlsaidtrading.com, you sign up with your email, then you are eligible to join the event. You will get an email sent to the email that you signed up with when the event starts. So actually I don't think I have to fix that stop loss right now. I can just add a alert here. What I wanted to first talk about is the event that we're doing next week. So it's going to be Monday, Tuesday, Wednesday, Thursday, and Friday. We're going to be having a technical trading workshop. And as I said, you can sign up with the link rlztrading.com. It's going to be a really, really good event. You will learn a lot when it comes to technical trading. You will also learn about, basically, this is not a introduction to technical analysis. This is an introduction to my technical analysis. It's an introduction to the way I'm trading. This is not your everyday technical analysis course. It's going to be a unique course that's not found anywhere else, because it's my way of trading. I'm going to be showing you what I think is the most important things to know about technical analysis. Remember, I've been trading technically. I've been a technical analyst for 8 years now, and I've gone through many different systems, many different technical tools, many different indicators, and I know which ones work from what I do in the market. So from my perspective, I know what works. I know, for example, that there's a lot of different trend line indicators, trend line tools out there, and they're all basically worthless. You know, the only true way of using a trend line is just manually adding the lows and the highs, and people are using, you know, Andrews, pitchforks and stuff like that, and trying to, but statistically, through my own research and many other experts' research, things like that simply does not work long term. And I'm going to be focused on what actually works. What works in technical analysis, what can make you money in the market using technical analysis. That's the main focus on that week. I'm going to show you that on Monday. On Tuesday, I'm going to show you the auto-set method. On Wednesday, I'm going to show you the auto-set reversal, the new system that I've been working on. On Thursday, we'll be combining all of this and adding the extra layer of trading psychology into that. And then on Friday, we're going to do the giveaways, and we're going to do the special deals, the Black Friday deals. And I'm also going to be announcing the private mentoring, which is going to be quite affordable. And I'm also going to have a lifetime deal, but more on that on Friday. But basically what the lifetime deal means is you can sign up for a fairly affordable deal and be a member of the private mentoring forever, be part of the community forever, with all the updates and all the upcoming programs and all of that. One price, so no recurring fees on that one. And for those of you who are on the fences of joining the community today, the best offer that I have right now is in the description of this video. We are going to increase prices after Black Week, but if you want to lock in the current prices, you can use the code in the description, which gives you a 50% discount on the monthly, the 3-month, and the yearly. So on the yearly, if you look at the yearly rate right now, with the 50% discount on the already discounted price, you will get up to 75% discount on the yearly plan. So make sure that you, if you're interested in joining this and the private mentoring program, make sure that you lock in the current price, and you're then immune to any price hikes in the future. Okay, so let's get to the actual analysis right here. So we do have the S&P 500 here, and what I wanted to show you here is, and this is something that I'm going to dive deep into with the technical trading workshop. I'm going to explain this because this shows us part of the new system. But basically what you have right here is you have the S&P 500. You look at, you zoom out, and we try to find the primary trend. And I think everyone agrees that we look at this and we can say that, actually I do have these old drawings on here, and we could safely say that the S&P 500 at this stage was in a bear market. I think most of us can agree with that. Adding a channel here is to show you that price is basically fluctuating between the highs and the lows of this channel. The S&P 500 was in a bear market right here. And then yes, the USD JPY trade is still active, and we're going to be looking at that one in just a minute. That one is still active. I'm in that one. Remember, I'm a swing trader. I'm looking at the markets from a long-term perspective. I'm not going to exit trades based on low time frame price fluctuations. Basically what I'm saying is I'm not going to panic, you know. But anyway, so here with that higher low, and then this higher high right here, we kind of break in that structure. The S&P 500 was in a bear market during the time between, let's say, around November 21 and December 2022. So basically all of 2022, the S&P 500 was in a bear market. So that is the primary trend. That's the primary trend in that stage of the market. This is now the primary trend. This is a raging bull market. We could argue that, you know, depending on what you're looking at, we could say that this is the bear market, maybe a mini bear market, right? But I would also say that this could be viewed as a secondary trend or a secondary move within the overall bigger bullish trend, which is this one right here. Okay, so the primary trend, I believe, is this one, and this one is the primary trend. That is the secondary trend right here. Could be very well traded as well. It's like maybe bear trend, maybe not. I think overall, I think this is the primary trend that we're looking at right here. So we're bullish, okay? We're bullish, and for that reason alone, we're going long. And what we're doing is we're looking for a break and retest of a horizontal level. Here's a break and retest of a horizontal level. We add the fib from the anchor low to the anchor high. That gives us the 50% level right at the breakout level. Absolutely beautiful. We go into the 4 hours. So this is now we're going to 4 hour. And what do we look at on the 4 hour? Well, we want to look at a combination of things. We want to look at, and again, I'm going to explain this in great detail on the Wednesday webinar next week for the Black Friday event. We go to the 4 hour and we look for certain things. We look at mainly pin bar candles, engulfing candles, double bottoms, inverse head and shoulders. For all the examples that I'm going to cover next week as well, I'm going to be talking about long examples, and you have to understand that it's exactly the same when going short, but completely in reverse. But you have a strong bullish candle right here. So this one, you know, I'm not going to say that this is a pin bar, but it has a good wick to the downside. So the reason why I'm looking at pin bars and engulfing candles is because, and also with engulfing candles, within that, I'm also looking at outside bars, which is pretty much means the same thing. And then pin bars, what you have is just a big wick to the downside, indicating selling pressure, that the market opens here, comes down, gets bought up, and closes above, which means that throughout the day, the market got bought up above where the market opened. It closed bullishly with a lot of buying pressure. And then the next one is a strong bullish breakout candle, and also you could argue that this is an engulfing candle as well. And then with that, after that forming, you have a double bottom on the 4 hour. We have the neckline right here. It's a break and retest of that double bottom on the 4 hour. We could also be looking at perhaps a inverse head and shoulders, something like that, with a break and retest of the inverse head and shoulders neckline right there. It's basically, it means the same. It just means the same, right? And if you go into the 1 hour, we see this absolutely perfectly. And what I like about double bottoms, or the best types of double bottoms, is when the right leg of the double bottom is higher than the left leg. And better is if you see that price is bouncing within the reload zone of the left leg. So adding the fibs again from that one to this one, putting only the reload zone on, you see where is price bouncing? Well, of course, it's going to be bouncing right inside the reload zone. This is why the system is called the reload zone reversal, the RLZ reversal, and this is also what the RLZ method is utilizing as well. Now we can again look at where is price bouncing here. If we add the 50, we'll see that in a breakout move, and when you have a lot of momentum, price usually bounces on the 50% fib, and that's exactly what you get right here. So you have two different options, actually three different options of entry. You could be entering when you have confirmation. You go back to the 4 hour, you look at that wick to the downside, you have a bullish engulfing candle, and then if you go to the lower time frames, you see that you have a reaction down here. We can go even lower, down to the 15-minute. I'd say that this is a fairly good reaction right here, a bullish candle right here on that one, maybe enter on that one right here. Now what's interesting is the reload zone, of course price action is fractal, and you'll see that the reload zone is applying or following the rules of that as well. So if you add the fibs from that low to this high, you will see that the reload zone gets touched here as well. And this is what I like about the reload zone when you have different confluences. So here what you see is you have confluence with the mid reload zone and the 0.618. That is a beautiful entry right here. So if you really want to get those sniper entries, you want to make sure that you enter around this time. Now you can enter, you can have the low right here. And now we're obviously talking about an insane risk to reward trade. Now you could just be targeting, instead of targeting the very high up here, you could just be targeting the breakout area right here. And this is a 9R trade. Now, if you're going to be trying this out, I would recommend doing so with very little risk, while also trading your main setup, right? So your main setup might be the break and retest of the neckline of the W, right? But you could be experimenting with this and just add like 0.1% risk, okay? Because that 0.1% risk on a trade like this will almost transform into a percent profit. So remember, you're risking 0.1% of your account, which is nothing, but you're able to almost make 1% on a trade like this. The risk to reward is just insane. And with 0.1% risk, you can lose 10 trades in a row and only lose 1% of your account. If one of the winners of those 10 trades is a winner like this, you'll make it all back and then some. And that's the beauty of applying the reload zone on the lower time frames when you have that bias of the higher time frames confirming a trade. Now, again, I'm gonna have a detailed course on that throughout the Black Friday week, so make sure that you sign up. It's completely free. I'm giving you everything completely free this week. Everything I do, all my systems, everything completely free. You don't have to pay anything. Although if you want that extra private mentoring aspect, you do have to pay for my time. But next week, it's all free. Let's remove some fibs here. Okay, what time is it? What's up, Hamed? Welcome. Nice to see you guys in here. Okay, so we got the S&P 500 running. I like this. Looking very good. Let's look at Euro GBP. We now have a retest of the reload zone on Euro GBP. Remember, I entered on that breakout, obviously an early entry, but like I said, I'm building a position. I'm adding to my position with time. And this current candle that is going to close in 1 hour and 37 minutes might be that confirmation that I'm looking for. If we add the reload zone from that low to this high, you will see that price is currently right now within the reload zone. And if we can close this as a bullish candle, preferably above the previous candle, so above that one right there. If that happens, then I would most likely add to this position. Second breakfast, really? Nice. How many breakfasts do you have? Or is like every meal of the day is breakfast? Okay, USD JPY. So now obviously USD JPY is not looking very strong here. And I think one of the reasons why we're not seeing the type of follow through that I wanted to see is because the dollar currency index, we are seeing some weakness in the dollar. If you go back to the, or if we go down to the dollar currency index right here, what we do have is a break of structure. Basically, we have an uptrend right here, and we have a top formation right here, and basically a distribution range on the dollar currency index, and a break and retest of the range lows of that distribution range, which is right here. Now, interestingly enough, let's go down to the lower time frames, and never mind, that's not going to give us anything. But we do have a reversal pattern, 5 meals a day. Nice. Well, if I count everything I eat every day, I shouldn't be eating all the things I'm eating, but I'm probably eating way more than 5 times a day, unfortunately. But yeah, we do have a break and retest of the accumulation area here on the dollar currency index. If we draw this line to the left, we see that we did get a rejection here, bearish engulfing, the bearish engulfing right here. Okay, this is a good question. So what will happen in the community in the next day? So it's not the next day, it's next week, starting next Monday. I will be doing a technical trading workshop. So everyone who signs up with their email on rlztrading.com, you can see the link right here at the bottom of the page. You go to rlztrading.com. The link is also in the description, and then there's a page where you can sign up with your email. There's also a video where you can see the actual event on what's going to happen on that week. So go to that website, check out the video, and it explains exactly what it's all about. And if you sign up with your email, I do recommend that you sign up to the Telegram as well to get all the information you need on that. Basically what it's going to be is going to be a detailed explanation of my trading approach and my systems and all of that. We're also going to be doing some giveaways. I'm going to be giving away access to the RLZ Slingshot. And the thing is, what I'm doing here is, the current structure of the program is called the RLZ Exclusive. That is transitioning over into more of a private mentoring program, but it's still going to be the same that it's included in the program right now, which means you gain access to the RLZ Slingshot indicator, a course on how to use the indicator. You get the RLZ method trading course where I break down the RLZ method, and you also get a third course, and you also have you're also going to be eligible and rolled into the private mentoring program automatically if you join the RSL exclusive as well. I'm not going to chill that anymore. It feels like I'm just talking about that. I want to focus on technicals here now. But let me know if you do have any more questions on that. The dollar currency index is putting in the top, which means that there's going to be USD weakness. It could also explain the fact that the S&P 500 is moving quite heavily to the upside with strong force, I should say. Let's add a low time frame level right here. If we reclaim that level, I might be looking at adding to this position and moving stops up to entry. Actually, that's exactly what I'm going to be doing, adding and moving stops to entry. Let me... Why can't I adjust that? Let me, okay. Double position, move stops to entry. Okay, so I'm going to be doubling the position and I'm going to be moving stops to entry. Can you please take a look at gold? I can definitely take a look at gold. I want to take a look at first. I want to look at EURUSD. And we looked at this yesterday, where we had a possible breakout above a ascending triangle right here, and the breakout happened a bit earlier than expected. We want to look at the volume here. What is the volume telling us? There's very low volume on this breakout. Not sure how reliable. Stop, Michael. Look at USD CHF as well. Not sure how reliable this market, this volume is. See if I can look at the futures market as well instead. I honestly can't remember what the future, what the ticker for the future market is. Like this, the ticker for CM, like the CME futures market. Yeah, that's not the one. Could be this one, Euro FX futures. Yeah, gonna be this one. Okay, so look at the volume here. Look at the volume of this breakout. And I would say that this is, so let's go to the 4 hour. Yeah, let's go to the 15 minute. What is the 15 minute telling us right here? This is weak, you know. If this is resistance right here, now of course we do have a break and retest of this resistance right here, but look at the volume. Volume is decreasing quite heavily here. While volume on this break lower was at the highest. And then on every touch of that resistance, volume actually kind of gets weaker. And on that breakout, you know what they say, volume confirms the breakout. And this breakout right here, minimum volume. Then we're coming down for a retest and volume is decreasing. So I believe that I'm not sure I trust this breakout, but from a technical perspective, it does look pretty good. If you take into consideration what we have here, we have a nice break and retest here. But if you move to a clean chart, I'm going to move to a clean chart just to make sure I got a clean perspective. Sometimes it's important to kind of remove everything and make sure you have a clean perspective. Okay, this is on the 4 hour. So the breakout area on the 4 hour, I would say is this level right here on the euro. Now, if we add the fib from that high to that low, where are we seeing the rejection? We're seeing the rejection right within the reload zone. And if we zoom out, we see that this is an overall downtrend. Okay, this is an overall downtrend. So for me, euro strength would not really be confirmed unless we reclaim this level like this. Now, of course, we go to euro here, go to the daily. Going to be removing some stuff here. Up too much space. We go to the daily and we see that price is at high time frame support, but right at this very level, that's definitely high time frame resistance. So now we go back into the 1 hour. Where is price being rejected at? Remember that white horizontal, that's the high time frame resistance. So we have a low time frame breakout on low volume right into high time frame resistance and a very clear rejection. This is the level that needs to get reclaimed. This is not the strength that we want to see on Euro USD. I'm not looking to buy Euro USD here. What about GBP USD? Very weak reaction. Very weak reaction. Definitely not interested in going long GBP USD. Oh, I want to go back. I want to focus before going on to the next chart request. I want to focus on USD JPY and the strength of the dollar. Because now obviously price is coming down and it's testing an important level here. So this could either be a double bottom on the 4 hour, or it's going to break down, because this is now obviously a change of character of this trend. We broke the trend line, as you can see right here. The trend line is broken, and if you look at every bounce here, you can see that swing point, these are all higher lows. Come down, test that level, another one. And then here, if we break down here, that will also actually show us a sign of reversal for USD JPY, which aligns with the dollar currency index chart. So what I'm going to do here is we're going to be comparing DXY with USD JPY. Which has a very positive correlation. That's pretty cool. This is very interesting actually, because it has quite good correlation, but sometimes that correlation breaks. So at the bottom of USD/JPY, the correlation broke, and dollar currency index kind of lagging behind here. So now we're back into positive correlation. See here, it's a downtrend on USD/JPY, dollar currency index. You got a big move to the upside, a big move to the downside, and now it's moving here. So it's definitely following the positive correlation of dollar currency index quite well. You can quite clearly see it here. Let's go to the dollar currency index chart. Look at the VIX as well. VIX is moving lower. We had a move up, but it's not moving lower. At this 4-hour candle closing in 1 hour and 20 minutes. Might be, depending on this 4-hour candle close, I might close this position daily as well. Also have a high time frame resistance here, so there is sort of a resistance area right here, and that bearish engulfing candle was right at that high time frame resistance. Is basically if we break down here, then we have a completely different structure, and I might have to take a loss on USD/JPY. All right, so we're gonna be looking at gold, we're gonna look at USD CHF, and we're gonna be looking at CAD JPY. Let's go. Start with USD CHF. First, I want to look at the dollar currency index, the S&P 500 correlation. What's up, Henry? Welcome. I think it's actually, because now we have a dip. We had that dip in S&P 500. We also see that dip in the dollar currency index. I think actually the correlation is live. The positive correlation between these, it's actually confirming here. So very interesting, which means that we could still be looking at going along the dollar while also being long risk, which is like Bitcoin and the S&P 500. Quite interesting. Then, of course, the dollar currency index here is weak. If the dollar currency index can reclaim this level, that would be insanely bullish for the dollar. And I haven't looked at the fundamentals today. I haven't done any looked at the news and tried to digest current macro, but I'm going to be doing that later today and hopefully share the results with you tomorrow or throughout the day in the Telegram channel. What's up, Henry? So you're shorting that triangle breakout on GBP/AUD, TP at twice the length of the triangle. Very nice. We're going to be looking at that as well. So let's start with USD CHF. Okay, so remember, this is a long idea that I had on USD CHF based on the fact that I was looking at a reclaim of range EQ up to the range highs. If we're going to see the dollar continuing its move to the upside, this is definitely one of those pairs that I'm looking to trade to the upside. So where would I, and remember I closed the position on this one. But right now, this is what we have for USD CHF. It's obviously in the exact, like the right area for a bounce. It looks absolutely amazing. Adding the, especially looking at the stochastics RSI here. Stochastics RSI is very, very low. We got the regular RSI low as well, and we're looking at the MACD. I would love to see the MACD turn bullish here. That would be really nice as well. Now, of course, you see that most of the time at the bottom, the MACD turns bullish quite late. The MACD is lagging quite a lot, but we'll monitor that. So what I'm gonna do for USD CHF is I'm gonna be adding an alert up here and one down here. I will be adding to this position on, I mean, looking at the 4 hour here, there is a bullish engulfing candle, right? But I would love to get out of the reload zone and then get in on something like that. Right, let's take a look at gold. So let's use USD CHF. Let's take a look at gold. What is gold doing right here? Ahmed is saying that it has a gold is exiting the zone. Ahmed is saying that it's possible break and retest on gold. I'm assuming that you mean a break and retest. Well, if I'm not, I can't add the reload zone here, the fibs, because that would be based on this trend, right? And this trend is like that's one move and that's one trend, and now you're starting a new trend here. Okay, so again, this is the secondary trend, and you want to look at what's the primary trend. And the thing here with gold is, yes, the primary trend is, I would say, bullish to neutral. Well, I would say it's bullish, but it's showing signs of a rejection, break, whatever you want to call it. This level here is a very good level if you're looking for a short on gold, which I'm kind of doing, you know. So what I'm hoping will happen here on gold is we'll form some type of swing high here on the 4 hour. Is there a trend line here? Let's see. Got the trend line here. I have another trend line in this area. See, you have accelerating trend lines here, obviously. It is hitting the 50 of that move though. But and as we see here, if you look at the daily, we'll see that you have a top, a bottom, a top, and a bottom, a top, bottom. So you got one move, 2, 3, 4, 5. So adding the fib from this high to that low captures one of those daily impulse moves. Now looking at the 4 hour, you have this. Okay, so it's basically 2 moves here on the 4 hour, but on the on the daily, I would say that you're capturing that move on the daily. So there is of course some confluence in here, but gold is looking strong. Okay, gold is definitely looking strong. So, and we have a good looking level here. So I mean, if we start reclaiming this level and we start putting in bullish market structure here on the 4 hour on gold, maybe it's time to look for a possible gold long. But I will also be I'll basically be looking at what price action is doing here and trying to see how price action can guide me. I mean, if for example we have a break and retest here on gold, that would be a long. If we have a fake out, a move down, and a retest from the downside, that would be a short. maybe we'll get sort of like a head and shoulders pattern here, you know, because gold printed sort of a head and shoulders pattern here at the top. That might happen again. Okay, let's see. What else do we have? Oh god, I'm tired. I need coffee. Okay, what else? What else do we have? What else do we have? What else do we have? We looked at CHF JPY. Let's look at CAD JPY. Let me know if you got anything else you want me to look at. CAD JPY. This looks terrible. Start at the weekly. Got resistance on the weekly. Resistance on the weekly hit the 50% on the high time frame fib. Going down to the daily, we have okay, so we have to first ask yourself, what's the primary trend? The primary trend is obviously bullish with higher highs and high lows. Get a massive resistance around this area. Let's adjust this on the daily. So we have a reclaim of that support. We're now, I would say we're looking at a reaccumulation above resistance. We're using this level as support. We're accumulating above support. That's obviously good. If you're looking for a long on this, I would be targeting this area, like the reload zone. But I'm not getting a good feeling for this. Like technically, I'm not really getting a good feeling for CAD JPY. And on the 4 hour, this is a range, right? So I want to try to see if I can, I want to trade trends, basically clean trends, and for me this is not really a clean trend, so I got really nothing to add here on CAD JPY. Let's take a look at GBP AD. I'm interested to see what that triangle is all about. Okay, so okay, on the 4 hour I'm kind of seeing something. Let's see, maybe it's on the 1 hour. Is it perhaps this one you're talking about? Yeah, it's probably that one, right? Henry, let me know if this is the triangle you're watching. Yeah, okay. Yeah, that's really good because you have a bearish engulfing on the 4 hour. You also have a strong bearish engulfing on the 1 hour. So this looks really good. Now let's see, where is the I'm gonna assume that we'll just take the full length or the full height of this triangle. Also remember that I usually say that somewhere between 70 and 80% is when triangles like this one usually breaks, and if you look at that, that's 100%. That's 50%, so that's gonna be, which one did I use, by the way? Is this, did I use the price range here? No, I used this one, right? That's 50. So now drawing from 50 to 100. give us the 75. So that's 75%, right? That's correct. 50%, and then half of 50% gives us the 75. So this is 75% completion around that one. And that is where the triangle is failing. So let's look at the whole height of the triangle. Let's say that's the breakout. 93,473. 93,473. Yeah, I think that's a good TP. So I would TP somewhere around here. So I would TP around 93,536 probably. But yeah, I do like this. I think this is a good, possibly a good trade. And you can even start looking at moving stops to entry at this point. And your question on the logic behind you check gold futures to have, I'm not looking at gold futures. Okay, EURAD. You're looking to long EURAD. If it forms a right shoulder on Quasimodo, do we want to long EURAD now? I mean, look at EURAD on the daily. This is, wow, this okay, this might be a short actually. We got CAD CPI coming up. I mean, this looks like a possible short, but you look at the, I don't know, like the primary trend is bullish here, and then you have that. But that's a beautiful break in retest right there. We'll see. Not sure about that one. Correlation between what, Hamid? So got someone saying that it looks like USD/JPY is falling. Oh yeah, it definitely is. Definitely is. It almost hit the stop loss right there. And it looks quite weak here. I mean, it obviously broke this trend line. We had a break of trend line. We had a bearish rejection of the trend line. It's obviously getting bought up here, but I don't think it's much to hold. I think it's better to close this trade. So I'm going to be exiting USD/JPY here, and because now we're breaking below. This is a break to the downside on that level. You can see how we held support here. Now it's moving down. Now, of course, if we reclaim this level, I'll be entering another long on this right now. But it does seem like today we have USD weakness, and of course, if we see that we are recovering this move, then I'll be looking to add to this again. We're seeing a decent reaction to this level on EUR/GBP. Yeah, the correlation between gold and gold futures is they're basically spot price, and futures are mostly traded the same way. Why you want to look at futures is because if you look at, like, the Forex market is decentralized, so all the volume traded in the Forex market is not in one place, but in the futures market you have it's centralized. The futures market are traded in one, that specific exchange has their reporting volume, so it's more reliable to look at the volume and the level 2 data in the futures market, and then take that data into your decision making in the Forex market. I'm going to look at the seasonality effect of USD JPY. I'm sorry, I'm just trying to. There's something wrong with my window here, so I think I have to remove myself for a minute here to show you everything. Okay, so let's look at USD JPY. We'll look at the seasonality effect here. So for the last 24 years, October, November, and December has been bullish. 15 years, November bullish, December around break even. Last 10 years, we see November slightly bullish and October very bullish, with December being not very bullish. And then for the last 5 years, we see November and December not being very bullish. So for the last 5, 10, and 15 years, we do see that USD JPY is not really bullish this time around, which is obviously interesting to see, because going back to, by the way, I do realize that I didn't show you the full screen before, but I am now. Look at the daily here for USD JPY. October is usually bullish. And this is October, right? And as you can see, very bullish. And then November slightly bullish, but then December not very bullish. So, and you know, December starts here. That's December. So, I mean, looking at this from a seasonal perspective as well, we can look at the weekly. It definitely looks like we might see see that rejection here, like we did. And then price maybe starts moving like this, in December, before moving higher in the beginning of next year. So the seasonality effect here is kind of makes sense, if we do put in the top here, that's what the seasonality effect is telling us about that. And you look at the seasonality effect of dollar currency index. Go to 5 years. You see that, actually, let's start at 53 years. Okay, the dollar, you can see right here, the dollar is bearish in December for the last 53 years. And if you look at the let's see, we're gonna do in December. So this is for this is the analysis on December for the last 53 years on the dollar currency index, which we see is quite bearish. And when we look at the winning trades here, it says 32%, which obviously means that there is a 68% win rate for shorts. Okay, so if it's a 32% win rate for longs, which this is based on, then this means that for shorts, or for basically selling this the 1st of December and then buying it back at the end of December, the last December, that's a 68% win rate. 25 years is even higher. Here we have a 72% win rate. And the top is around, yeah, for the last 25 years, the top in the dollar currency index is around the 22nd of November. And that's in 2 days. For the last 15 years, there's actually, for the last 15 years, December, look at that. Is that actually true? Yeah, so for the last 15 years, December looks like it's slightly bullish. For the last 10 years, bearish, and the win rate is 80%. And for the last 5 years, very bearish, and there's the win rate is 100%. So for the last 5 years, the dollar currency index has been bearish every December, 100% win rate. For the last 10 years, the win rate is 80%. So there's definitely the only time it's bullish is if we look at the 15 years. So overall, there is a seasonality pattern here with the dollar reaching a top and moving down over the course of December. And that's definitely something we have to take into consideration. And then if you look at TradingView and you go to the dollar currency index chart right here, you will see that we are at high time frame resistance. And how long did it take us to move from high time frame resistance to range EQ last time? It took 42 days. If we're going to see a similar move, that means that, look at that, at the end of December, we would reach range EQ, which coincides perfectly with the seasonality effect of the dollar. Which makes so much sense because, listen. This makes so much sense because I'm looking for, I was looking for this possible correlation between the, actually it makes no sense. It makes no sense at all, according to my analysis. So, because last year, in 2016, the dollar currency index in December was actually bullish, which kind of makes sense because if you go back, yeah, okay, that makes sense. That's an outlier. So I'm actually trading an outlier here, which does not add confidence to these ideas at all. So I probably have to reconsider this. I probably have to reconsider my bias for this correlation to play out. But that's it, guys. That's my overall trading for today. We do see that the USD JPY trade here is coming back up, but I do see it as likely that we're going to get a rejection here. If we do start reclaiming this level, then I'll be adding back this position and hopefully I'll make back what I lost on this one and then some more. Okay, guys, that's it for today. Hope you guys enjoyed these live streams. I'm going to be back at the same time tomorrow as well. Make sure that you sign up on the rsztrading.com website, and I will see you all in the next live stream tomorrow. All right, take care, everyone.